Very good afternoon. You're watching India Market Close. I'm Tamanna Inamdar. It's been a tepid day of trade at best, with weakness and profit booking as an overhang on the markets. The Nifty managing to stay above the 22,000 mark quite bravely, I would say. That level has been respected through most of the day. The Sensex also seeing a bit of pressure. Let's pull up broader market and see what's happening there. Remember, the big anticipation is for the number of the day, I would say. HDFC backed numbers expected any minute, and you must stay with us for complete and comprehensive coverage of that. Having said that, the broader markets are also seeing quite a bit of strain through the day, recovery from the lowest points of the day, but yet you are seeing pain in the broader markets as well, even more so, deeper cut relatively on the Nifty small cap. Let's pull up the advanced declines and see what's happening there. Remember, Fin Nifty expiry today, so that's also weighing through. You've had a bout of profit booking, and that's been the overall theme, whether you have the IT stocks, which led the raise yesterday and now are leading the fall. Look at that momentum through the day. And over here, you are seeing a very volatile kind of a day of trade, range bound and volatile, I would say. So the next big cues perhaps being awaited. Let's pull up the heat map and look at what the performance indicators have been. If it's a good day for one sector, one stock, it's oil and gas and metals. That definitely is the big up move over there. Windfall tax has been paired, and that has helped push a BPCL impressively up 3% in trade today. ONGC also not doing too badly at all. Maruti put out a note today that they're going to increase their prices, their retail prices, by about 0.5% in this month. That stock in the green. But the story is largely here. And like I said, it's a story of profit booking, whether it's an HCL Tech, a Wipro, all of them seeing that pain. Infosys, TCS, all between 1 to 2% down in trade. And LTI, Mindtree as well ahead of numbers, seeing that pain coming in. A DV's Lab. So all of, I think, the best performers of the last few sessions have seen profit booking coming in. I'm going to quickly just pull up and see what's happening in Europe before I hand it over to Hersh for those specific stories that have dominated through the day. But Europe seems to have had a weak opening as well, and a fairly weak opening at that. So Europe down in the red. We'll watch those indicators. But Hersh, in terms of sectors, the story belongs to all of the companies that have put out numbers. It's all about the numbers, is it?
Absolutely. So let me first off take it to the stocks which were buzzing on the back of numbers. You have the likes of an Angel One, which has been in the negative right from the start of trade. Despite it starting out to be quite a good day, it's now down 13.5%. Let me also go to something like Geo Financial. Again, that one on the back of earnings, doing poorly in trade as we speak. We're also seeing the likes of the banking pack, Federal Bank, Bank of Maharashtra. Focus comes back on HDFC Bank, but quickly on Federal Bank, down 2.7%. That NIM number not seeing much of an improvement. Also Bank of Maharashtra down around 1% after its numbers. Some amount of profit booking also to some extent being seen there. Also with regard to the likes of an HDFC Bank, let's flag that off because that one earnings expected any time now. But that's where we are, where the earnings basket is concerned. Let me also flag off CE Infosystems actually. That stock is also in the negative on the back of earnings, and it in fact slipped into the red post the earnings. CE Infosystems, if we can have that stock. Quickly also moving on to some of the other buzzers in terms of trade. You have the likes of a PNC Infra, positive buzz on that stock, doing very well on a weekday of trade, up 4% after divestiture of some of its assets. Nalco also, its JV to start exploration with regard to lithium, that one up as well. Sarda, contract win, Sarda Energy, that one is also up in trade, roughly 2% or thereabouts. You're seeing Jyoti CNC, what a stellar listing on an otherwise weak day of trade. So 32% high on the back of that. Some notes as well. You have Paytm, which is buzzing on the back of a brokerage note initiating coverage from UBS. Stock is up 4%. Target price 900 rupees a share, so positive on Paytm on the back of that. And some stocks which have been in focus in the last couple of days. Let's pull up something like a Polycab. Stock is doing again very well in trade on a weekday of trade. And I also want to flag off something like an IRFC and an IREDA. Let's first flag off IRFC. Look at that, 8% gains on a day when we've seen some amount of weakness through the day. And also if we can have IREDA, not sure what that stock has done, but that one is down after quite a strong day yesterday. So those are all the stocks which are in focus today, Tamanna.
And what a list over there, especially the momentum that we've seen in railway stocks now reversing. I would just add to Hersh's list and talk about Realty, which has been seeing profit booking through the day. And again, India Bulls Real Estate, the deepest cut over there. iBulls down about 4%. Prestige, Oberoi, DLF, Macrotech, all of them seeing quite an extent of profit booking in today's trade. Though, of course, we'll wait and see what happens with HDFC and whether that lifts the mood. But right now, I would say a cautious market, definitely. Nifty down about 0.5% now. Let's see if we hold up above the 22,000 mark by end of trade. Hemen Kapadia joining us now. He's Senior VP Institutional Equity at KR Choksey Stocks and Securities. Hemen, great to have you back on the show. And it's a bit of a wobbly day, isn't it? The question is whether 22,000 holds.
A very good afternoon to you, actually, Tamanna. Thank you for having me on the show. Such a pleasure. Absolutely, it's wobbly. On the early charts, Tamanna, the Nifty and the Bank Nifty both have made small rounding tops. Not too much. I don't think you attach too much of importance to early chart, but nevertheless, that is in way explaining technically what you put forward very rightly, wobbly market. There was a big upward gap yesterday. There was another gap before that. So some of these gaps, Tamanna, need to get covered up. Need is wishful thinking. If they don't, it's better. They provide support. But some of these gaps are open. So there is always a possibility that an index like the Nifty will make an attempt to cover up this gap. We made an attempt today, wasn't successful. So chances are that this wobbly situation might continue for a few days more. But stock specific, I think there are a lot of things happening. Market breadth is a little bit under pressure, but overall, we've had a perpendicular rise. So if we do have some cross currents, I think it's an opportunity.
Right. Hemen, just very quickly, view on the Bank Nifty. You have an expiry today, a Fin Nifty expiry. Just views on the Bank Nifty. And would you completely stay off HDFC before the numbers are out?
Bank Nifty range between 4,800, 48,000 and 48,300. This is for on the intraday charts meant for a day or two. So frankly speaking, no trending bias. As far as HDFC Bank is concerned, very tempting, but I would say I'd wait just a wee bit. If there is a disappointment or a decline, I think it's an opportunity to buy. So I'd wait just a wee bit.
Sure, I mean, Hersh also joining in. Opportunity to buy on dips, but buy what?
Well, I would buy State Bank. I would buy Axis Bank. I would buy ICICI Bank. And on a decline, HDFC Bank also. And something like an MGL. You know, there are many stocks, Hersh, which have given breakouts or are on the cusp of breaking out. And they are giving throwbacks. So now Biocon is poised, interestingly. The MGL that I mentioned to you, Hersh. Now, the thing is, MGL has been consolidating over here for a long time. And we're on the cusp of breaking out of what is a 4.5-year consolidation phase. So I'm not saying it's impervious to corrections. But yeah, on a decline after the breakout, I think that makes it quite interesting.
Just interesting, I'm just jumping in because you spoke about SBI. And Citi has a note on SBI, which is not very exciting. To be honest, they say that they've rated a sell on SBI this afternoon because of the high ROAs that they see. But yeah, just coming in there, that target price that they see for SBI is at 600 rupees. Hemen, very quickly, on Paytm, if you have a view at all, UBS had a note out today, and they have quite a steep target price over there. Do you like Paytm on the charts?
I think currently we are in the throes of a comeback, a pullback, not a rally, but a recovery. Currently, setup is positive, so I'd be more positive than negative. Buying fresh at this juncture, no.
Understood. Take your point, Hemen. Citi, very interesting note, Tamanna, on SBI. What they are continuing to suggest is that ROA levers going forward look difficult. And also, mind you, this time around, SBI will have to provide for wage provisioning, which they haven't done. Wages were revised from upwards to 17%. They've provided for just about 14%. So that 3% delta starting 2023 will mean that, or rather 22, will mean that there is a substantial amount of provisioning which will come through this quarter. And therefore, you will see a tough set of numbers coming in from LIC, and that is what they seem to be alluding to. From SBI. Sorry, that's correct. Sorry, apologies. Yeah, and that's what I think they seem to be alluding to, that 1% ROA may not sustain. But of course, you have to wait and watch those numbers.
So if wage provisioning is a concern, one assumes the problem will compound because their wage rates are likely to go up as well?
That's correct, but it's always in the first quarter where the hit is the most, because you have provided for the last 3 to 4 quarters, which you will have to revise. Okay. So of course that provisioning is already done, but that is for the past quarters. You'll have to actually, on an actual basis, provide for the total amount in the first quarter. So they've provided for 14, they actually had to provide for 17. So the difference of 3% is what they'll have to recognize in this quarter, which is what I think they're alluding to. But yeah, so that's an interesting piece which is playing out. But let me quickly move on and let's have Varsha, who's standing by. She's going to talk to us about all the buzzing stocks in trade today. Varsha, what are the stocks on your list?
So, hi everybody. So, let's start with Indigo Paints, where shares hit intraday low of 2% with volume of 12.25x. Now, this is on the basis of one large trade at average price of almost 1,485. Then we have a PNB Housing Finance, which hit intraday high of almost 8%. Now, volumes were over 9x. Now, this is on the back of Motilal Oswal declaring the company as its top pick in the NBFC and Housing Finance ambit, and the brokerage firm has given a stock a buy rating with a target price of almost 1,025 per share. Then we have Aster DM, where it nearly surged 13%, hitting its lifetime high. Now volumes were over 8x its 30-day average. Now this is on the back where the board will consider the distribution of 70 to 80% of the upfront consideration of $903 million as dividend to its shareholder, which will be in a range of 110 to 120 per share. Then we have ITI Limited, which hit intraday high of almost 19%, is buzzing at a volume of over 8x. Now 6 large trades with 3 crore shares being traded with an average price of 357 rupees. Now it introduced a proprietary laptop and micro PCs under the name Smash, and recently won 2 tenders from Kerala for 9,000 solar solutions laptops. Then we have Capri Global, where they're now planning to insure have an insurance platform, as the company received a composite corporate agency license from IRDAI. Now, with this tech-centric focus, the company aims to leverage its robust client base to cross-sell insurance products. Then lastly, we have PNC Infratech, where it hit intraday high of over 10%. Now here the company with its arm executed definitive agreement with Highway Infrastructure Trust to divest 12 of the company's road assets and 1 toll concession. The enterprise value of the transaction is almost 9,000 crores.
Yeah, thank you for that, Varsha. You know, if I were to create a new category of defying all odds, or try and make sense of this, of stocks that are running up massively, on that list today would be Polycab, would be Z Entertainment, and would be IRFC. In fact, let me get Sudip Bandyopadhyay into the conversation, his group chairman, Inditrade, and ask him about some of these logic-defying moves that we're seeing in the market today. And I'll tell you why. Z Entertainment, I mean, you're 4 days away from a deadline on whether this merger with Sony will happen or not. No word at all. No clear indication either way, but you have sharp up move on that stock for no real rhyme or reason. From what I'm hearing, we'll have clarity maybe by the 21st. Polycab has been hit by a spate of news reports and actual income tax statement saying that they're raiding wire companies and they're the only ones in the news on this. The company comes and says, well, no, not really. There's one brokerage report, Jefferies, that says we don't see a big problem and that stock has been on a roll. IRFC has no negative news, but one has to understand whether it makes sense to be about 8.5% up, the kind of valuations we're seeing. Sudip, I'm going to come to you and let's start with IRFC. What do you think is going on there?
Well, I think, there is no doubt about the fact that they will have a great business for the next 3-5 years. The kind of work which is happening on the railway modernization, new coaches, new electrification, railway platform modernization. So there's no doubt about the volume of business which will go through IRFC. The only question is the valuation. And I think that has reached a level where, probably it doesn't justify based on whatever known facts are there. So I would not really jump into IRFC at these levels. I will wait for a time-wise correction at least before recommending or getting into IRFC.
Right. Sudip, we didn't get your views with regard to markets as a whole. Let me first get that piece out of the way. How are you viewing markets? It's been, a wobbly day, as Tamanna termed it, of trade today. How are you viewing it?
Well, definitely it's a wobbly day. It's up and down. It's continuing. And, I would say that we are heading into an event, which is the, interim budget. So obviously there is some nervousness. We also have a Fed meet towards the end of this month. That also will create some volatility. And we are in the midst of a earnings season where, there are obviously some headwinds on some of the sectors and companies. So a bit of nervousness at such elevated level is par for the course. So I won't read too much and get too worried about this kind of, little bit of topsy-turvy movement, particularly when the index was at all-time high. So a bit of caution, bit of correction, profit taking, whatever name you want to call it by, I think is par for the course.
Right. And Sudip, your picks in this market.
Well, Reliance has been my favorite for quite some time. And I think last time when we interacted, I did mention, I continue to like Reliance. I think still quite a long way to go. And if they post the quarterly result, there's a bit of a dip. It will be again a bigger opportunity to buy. The other large cap stock, which I still like and would recommend, is Larsen & Toubro. I think it's a fantastic story and it's unfolding. It's not that it's kind of fully valued. I think there is still a significant valuation upside in Larsen as well.
Understood. Thanks so much for some of those views. But, it's time for a quick breather. Stick around, of course. We'll dive deeper into what's happening in today's market. It's an interesting day of trade. Stay tuned to NDTV Profit. We'll join you after a very short break.
Right. It's a slow day of trade and a slightly negative outlook of trade, more of a wait and watch. But definitely markets off their lows right now. The Nifty IT still showing a lot of pain. I mean, the kind of rebound we've seen in IT stocks is quite a story. Considering the moves we saw just after the results had come in. But some of the other mid-cap names which are having a bad day at the job, Vodafone, definitely one of them, 4.5% down. Look at the entire pharma pack, Oberoi Realty, Prestige, Poonawalla Finance, Oracle Finance, a lot of the NBFCs and smaller financials not doing too well. Federal Bank had its numbers out today, and that stock is about 2.5% down. In fact, Hersh, that's something you tracked quite closely. Just take us through why Federal Bank seemed to be a miss for the street.
Well, it seems like, the margin recovery, which was expected to play out in this quarter as well as maybe a bit even in the last quarter, doesn't seem to be picking up. So margins is where I think the street is focusing on. Also, the slippage number has come in slightly elevated, and those two numbers are a bit of a bother for the street. And justifiably so, because it's a tough deposit-taking environment, and deposits are coming in at a very high cost, which is definitely beating down both margins as well as therefore impacting profitability. And that's what we're seeing. Even in terms of your gross NPAs, the ratio has gone up. It's inched up a little bit. Despite very strong growth, your NPA ratios inching up means your gross NPAs, absolute values have gone up as well. So it's some of those factors which seem to be playing out very sharply. And that's what markets seem to be viewing not so, maybe they're not so happy about some of these things that are playing out.
Remember, your HDFC waited eagerly in the newsroom here and in the studios at NDTV Profit. So that, of course, one that we're watching out for, and SBI is the other one. Sudip, can I come to you on SBI? Before we went into the break, we were talking about the Citi note on SBI, which doesn't seem to be too excited about the stock. In fact, they've put out a sell call, 600 rupee target, and their concern seems to be the ROAs. Hersh was explaining that the kind of provisioning they've done for wages will spill over. You have any take on SBI?
Well, I'm positive. I think the point made in the report as well as by Hersh about the extra provisioning which they will be requiring on account of the shortfall, I think is valid. But that doesn't take away from the fact that, this is the largest bank. We are in a phase where there is a significant credit growth happening, and it's expected to continue. 3, I think, the asset quality all around has improved significantly. 4, I think recovery from the written-off assets has been happening, and I think that process will get accelerated going forward. 5, I think most of the subsidiaries of SBI have been performing admirably well, and that gives SBI an opportunity to maybe encash a part of their holding and buffer, create additional capital buffer. So, if I'm looking at it from a long term, not this quarter, not maybe next quarter also, but if I have a 1 to 5 year kind of a time horizon, there's absolutely no problem in State Bank at current levels.
Right. Also, Sudip, can I have also your views with regard to any other PSU banks outside of SBI? SBI, even in terms of price to book, looks fairly attractive at this point. But outside of that, would you venture into something like a Bank of Baroda, Punjab National Bank at this point?
Well, Punjab National Bank, if you're an aggressive investor, I will definitely recommend Punjab National Bank. I think the same logic which you just said, that price to book does look very attractive, and there has been a lot of change. We continue to think of these banks with the same prism of 5 years back when they were inefficient and there were a lot of lacunae in their systems and processes. But we believe that things have improved quite a bit, and these banks are becoming stronger and stronger in terms of their systems and processes, and the possibility of a major disaster or a mishap like what had happened a few years back is remote. Under the circumstances, I think considering the network, considering the balance sheet, I think they deserve a better valuation.
Sure. So that's on the fundamental side. Hemen, any views from a technical standpoint? How are some of these PSU bank basket of stocks looking like, especially the frontline ones on charts?
I would Hersh go with the safe one, State Bank. You mentioned about that City report, but I would still maintain a bullish view on State Bank. Having said that, you have even stocks like Can Bank, you have Bank of Baroda. All of them have done phenomenally well. Okay, they could be in small breathers of sorts and taking a break or so, but the setup remains unequivocally bullish. And coming back, if I can digress just a bit, Harsh, if I look at the Bank Nifty, the Nifty PSU index, the Nifty PSU Bank index, the Nifty Private Bank index, all of them are pointing toward the same thing. 6 weeks of a consolidation. Maybe the results disappoint, there could be a small dip. But if I were to take a 2-month view, the Bank Nifty is crossing 50,000. And all of the 3 stocks I mentioned at the beginning of the show are going to do well. And it also means that the PSU banks won't lag behind, Harsh.
Right. And Hemen, we're in the last half hour of trade. Very, very quickly, 20 seconds maybe, your picks.
Buy, sale, entry, 117, stop loss 10, 110, target 131. Buy ICICI Lombard, 1380, 1355, target 1430. 1 week.
Absolutely. That's what I like about Hemen. He's to the point, precise, and wastes no time. Stay on with us. More with Hemen and Sudip after this very short break. Don't go anywhere.
Welcome back. You're watching India Market Close here on NDTV Profit. And we have with you Welspun Living's Deepali Goenka joining, of course, Neeraj Shah from Davos. Let's head right over there. They're live from Davos.
The lady with us today needs no introduction. She's the CEO and Managing Director of Welspun Living. It's, well, the largest home textile company is, but now doing a lot beyond that. And Ms. Deepali Goenka, thank you so much for speaking to us on the sidelines of the WEF.
Thank you.
So tell us, I wanted to, you gave me a cue just before the interview started about what we could talk about a lot more. I was trying to gauge the interest of global corporations, global bankers in Indian manufacturing, because it seems to be a decade of manufacturing as opposed to only services. Tell us a bit about this whole piece, and then tell us about Welspun living in the scheme of things.
Oh, sure. So I think India has become a very important piece of, the whole sourcing supply chain matrix of a lot of the retailers globally as well. And I think it's coming to life even with the kind of India being a very strategic position right now, largest democracy, stable government, and looking at the whole opportunity for becoming, kind of other countries are there like China and the others. But I think India is becoming a preferred destination for sourcing as well. So I think in the scheme of things, with India is in a sweet spot. And if I speak about Welspun living here and textiles here, India is not only the biggest grower of cotton, it's the biggest exporter of cotton now. And along with that, for us, it's not just about towel and sheets now. We spoke about Welspun living, but it's the home solutions that we're talking about. The whole interesting thing that we have seen is that, we are becoming not just about being the solution for trends, solution for innovation, being a partner to sustainable way of doing businesses as well. And I think that's where we all are, where Welspun Living is really taking this forward. So one aspect is supplying to 50 countries and more than 50 countries across the globe. But India becoming a very critical piece for our markets, 1.4 billion people here. And the opportunity of the roti kapra makan is really, truly kicking in India. And I think that's where we see a great opportunity, from towel, sheets, rugs, carpets, and flooring as well.
Interesting. So I was speaking to the IKEA management yesterday, and they said that they want to make more in India, for India, and for the world. So that's my question to the global companies. To a large Indian company, my question would be, are people coming and telling you, in some fashion, you told this to me, but are people coming in telling you that, hey, you're doing X, why don't you do Y and Z as well? So you're doing steel, do you do pots and pans and cutlery as well? Is that happening?
Yeah, that's on the lighter side, yes. That's something that people are talking about, because I think people want to source out of India. And I mean, we've seen the phones getting outsourced, the Apple, working in India, the chips being made in India. I think people want to look at the whole supply chain from India. Toys, if it is toys as well. So yes, that's becoming a very interesting way of looking at India as a country and becoming the sourcing destination.
You get into toys as well?
We are not.
It's a part of home living, so for every house, you need to, if you have a kid, you need to have toys. Okay, what's impressed you most thus far about conversations at the WEF currently? And I believe you have a slew of meetings today at the Congress Center where we are at, which is why we couldn't do outdoors.
Yeah.
Also, it's very cold. But what is it? What are the kind of conversations that you've lined up for yourself, with your clients, with prospective other clients, what have you?
The interesting thing that I've seen today, so sustainability really is the bedrock of the conversations that's happening. But the important, and sustainability at that, we're talking about the scope 3. That's something that's really a really interesting conversation that we've seen. The other is the AI and the ML. So I think that's a very interesting bit. And I think if I talk about us and I talk about Welspun living here, I think imagine the whole point of sales, what is the kind of predictive analytics that the consumer is going to buy, or after 3 months, whether, somewhere in North India, what is she going to pick up, or whether what is the next interesting product or next interesting price that the consumer is going to talk about. I think the whole thing is about experiences. And I think AI, ML could be interestingly really looking at a lot of things, whether it's the cotton that you can predict the kind of the forecast and what it could be like, to what the consumer is going to buy, or the consumer experience. I think so that's something that it's going to be very relevant for me. But I think that's a very important conversation that everybody's talking about here.
It's found its way into your do's and don'ts regularly already?
It already has, actually, for me and for us at Welspun. I think when you talk about the sustainability piece and the scope 3, our machines have a way of, they're connected to, we measure our indexes of how much steam are we going to, we are generating, and how we have to control that. And it's all through Industry 4.0, and there's a towel counting mechanism that we have, because it also is, the industrial fatigue that a blue collar goes through. It's all AI/ML generated. We got an ASCOM award for that as well. So this is all finding its way inside our manufacturing. Apart from that, it also will find its way into the consumer experiences as well.
Got it. Okay. A couple of issues, if you will. One, because you're such a large exporter and the world growth seems to be kind of faltering, is that a worry? Part one for 2024. Part two, on the cost front as well, the unpredictabilities. While Evergrande was a blockage, Red Sea isn't a blockage per se, but is that increasing costs for companies such as yours, and how are you dealing with it?
So the world is very dynamic. The whole economy that we're talking about globally is we're in a very interesting space right now. And I have always told you that, when I talk about us as Welspun and about the businesses globally, I think United States of America has been a very resilient market. And I've always reinstated that. And I think we will, you would be knowing that the Fed has already been talking about cutting down the rates as well. So there could be kind of an upside there, yes, but there are so many elements in this world, and somebody rightly said that there are 24 countries that are going for elections, and it's going to be a new world order for a lot of them. So imagine 40% part of the world is going to be very, very different, in a very different space as well. So yeah, those are the important dynamics. There's a world, there's a war that's going on. The Red Sea issue is definitely a kind of something that we are watching and waiting what it's going to be. But there could be a solution coming in by March. However, I think we always believe that taking the destiny in your control is very, very important. These dynamics are going to continue. Cotton might not be growing that well somewhere, but how are we looking at hedging those risks? How are we looking at solutions is going to be the new world order. Believe me, the world has changed post-COVID, and it's not going to be the same ever.
So can I assume that it's difficult to kind of nail it down to what's the quantum of impact that disruptions like the geopolitics or Red Sea has on if not a quarterly, then a half-yearly basis? Is it difficult to point it down?
It is going to be. We are going to wait and watch. I'll tell you one thing, and I think let's keep it there, because it's a very interesting dynamic that's at play, and I think the whole global dynamics there, in the countries. I think let's keep it there. Yeah.
Okay, no problem. What about the consumer, the global consumer, US, Europe, etc.? Is that going to be a worry, or are you hopeful?
I always feel look at the worry or look at the opportunity. And I think that's what I look at, here. And I think for America, United States of America, the opportunity is there where, we at Welspun are looking at the share of shelf and how we, improve that share of shelf across the globe as well. So whether it's not a towel or a sheet, but it could be a brand that we've licensed, or our own brand like Christie that we have, or, or our brands in India like Spaces and Welspun. So I think the whole idea here is how do you up the whole share of shelf in the terms of quality, ticket size, and also work with the influencers like, the AIDs. For us, I think that's a very interesting bit of piece that we are evaluating and exploring as well right now.
Okay, one last thing before we wrap up. We're at the start of 2024. What is something new that one can expect from you? I mean, the name change was something new for me when I first heard about it sometime last year. But what is new to be anticipated of Welspun in 2024?
So I think for us at Welspun Living, the important thing in the core is the consumer globally, and what is she buying or he buying globally, and what is she looking at is going to be a very important bit. And in the terms of the experiences that she's looking at, whether it's D2C or B2C across the globe, I think that's going to be a very important bit of the flavor that you'll be seeing more and more across the globe. And the bedrock is going to be sustainability for us, and I think that's where it is going to be. And a key bit for us is going to be about the scope 3 that we'll be talking about more as well.
Okay, we'll talk about it during the end of the quarterly results as well, Ms. Goenka. But thank you so much for speaking to us today. Have a great remainder of the Davos.
Thank you. Thank you so much.
Thanks for tuning in.
All right, Neeraj there in Davos. I'm feeling cold watching Neeraj in Davos in the sweltering Mumbai heat, but he seems to be holding on all okay. Let me quickly go across to Hemen, Kapadia and Sudip Bandyopadhyay. I want to talk about metal stocks and Sudip, I'll come to you first on this. Metals in an otherwise tepid market are having a pretty decent day. I mean, look at SAIL, something on Hemen's watch list, already up for 4.5%, Hindustan Copper, Jindal, Tata Steel, the whole lot. Do you reckon you're seeing a turnaround in a cycle over here? Anything that you would now get fresh positions on?
Well, one has to remember that metals is an extremely volatile space. And the rumors today going around is that China is coming with a big incentive to kind of rejuvenate their economy. And we know that Chinese economy getting massive incentive definitely augurs well for the metal prices. And probably that's getting the metal stocks all over the world excited today. But we have seen this, getting played out multiple times. And whether or not Chinese government does come up with a big incentive, big kind of support, financial support plan for the economy, one has to see. And, as things stand today, it's in the realm of speculation. So I won't read too much into it. There is a strong possibility of Chinese government giving some major, subsidy or relief or incentive as far as to revive the Chinese economy. But we'll have to wait and watch. If somebody is an aggressive investor and wants to take out a position in anticipation of something happening in China, I think, it is an extremely risky proposition.
Yeah. Hemen, you like SAIL already up over 4%. Would you enter at these levels? And anything else in the metal pack that's on your radar?
Frankly speaking, Tamanna, if it's like you mentioned, it's 4% up, I wouldn't like to chase the stock if I have a trading position. If I am taking it from a medium-term point of view, yes, because I believe SAIL is heading towards 150, but this is a 6-month call, not a near-term call. Anything else which I like? Hindustan Copper has been a perennial favorite. It's walked into a corrective phase, so to speak. Long-term, the stock is crossing 400. Looks simply scintillating and has done well. Maybe the laws of gravity need to catch up a bit. And this one another stock which looks very promising is JSW Steel. It broke out of a 22-month consolidation phase, Tamanna, and it gave a throwback, gave a breakout again. Once again, it's cooling off. So frankly speaking, it's had a little bit of a flip-flop, but I think this stock is one of the better metal stocks during the calendar year 2024 for Tamanna.
Right. Thanks for that perspective, Hemen. But, I'll switch focus. We've spoken about financials. We've spoken about metals. Let's quickly switch focus to something like an Aster DM. The stock is up and away. In fact, it's hit a life high in trade today. It's considering dividend on the back of their Gulf business sale that they've done. Dividend expected to be in the 110 to 120 rupee per share kind of a range. And the plan is to distribute 70 to 80% of the consideration upfront as dividend, and the consideration was roughly $1 billion, which is roughly 7,000 crore rupees, 900 million to be absolutely precise. Let me first come in or bring in Sudip on this. Sudip, something like an Aster DM, how are you viewing this development, as well as how are you viewing valuations at this point?
Well, I think the excitement is around the dividend. And as you rightly said, the Gulf business is being sold. And the dividend is definitely going to come because the promoters, who are buying, who are also the co-buyers of the Gulf business, will use the money they receive out of the dividend to fund that acquisition. So obviously, dividend is going to be there, and a substantial one at that. So, for a dividend play, it's a fantastic, bet at this stage. But considering the valuation at which it is quoting, if you're not looking at just the dividend play, I think it's better to wait and watch, let this excitement subside, then one can look. Fundamentally, there is no problem in the India business, and that's what Aster DM will have now. And it's a good business to own, but I would recommend that let this excitement be over, and then this can be bought.
You want to go to Hemen on it? Okay. So, Hemen, let me bring you on this one as well. How is this one looking on charts? It's runaway 6.5%. You seem to be in a wait-and-watch mode where stocks have run up, but are you finding this one interesting?
Frankly speaking, Hersh, it's ticking all boxes if I were to apply the usual technical parameters. But at the risk of sounding repetitive, I'd still say wait for a cool off. And if you notice, we've had a huge gap up. It hasn't been able to hold those gap up levels, big gap up levels, and there is still a slight open gap. So I'd say anything between 385 and 390 would make it an interesting buy. Currently, everything is good, but it's not a compelling buy.
You know, the Nifty Realty has now outpaced the Nifty IT as the biggest loser of the day. So you're seeing a lot of pressure coming in there on the realty stocks. The biggest losers continue to be iBulls. Among them, the whole lot actually seeing that sell-off, Prestige, Oberoi, etc. I mean, anything you would pick up at this point in the realty space, or wait for lower levels?
I'd wait for lower levels, Tamanna. Frankly speaking, it's been a 10-year rounding bottom. So, but having said that, that makes it past 10s. We've had a 9-10 month one-way move from 360 to 894 as far as the Nifty Realty is concerned. So, I'd just wait for a cool off. But yeah, the way the sector index has moved and the way it is poised, I believe for the next couple of years, it's going to do well. But yes, currently, once again, the daily charts seem to be showing a slight overbought situation. Intraday charts have seen crossover sells coming in. So a mild cool-off probably is underway. Not too big, but yeah, I'd wait for a go.
Any individual names that you like in realty? Hemen, follow-up for you?
Frankly speaking, the favorites have been Godrej and Oberoi. So if we get any of these on a slightly decent technical valuation, I'm saying technical valuation in a sense that if they retrace, okay, Oberoi, we are 1526, closer to 1480, 1460, that would be an interesting pick at that level, Tamanna. So Godrej or Oberoi or both.
Okay, so Oberoi at 1480, so some ways to go before you come to 1480 there. Fundamentally, Sudip, any views on the whole realty story and where that next driver actually comes from?
Well, to my mind, the next driver comes from the interest rate reduction in the economy. I think if you have noticed the entire real estate space, particularly residential, over the last 1.5 years, I think this is the the high end of the real estate market, which has been very excited, whereas the low and medium range hasn't been that exciting. I think the high interest rate does impact that segment, and once the interest rate starts coming down in the economy, which should happen sooner than later, I think that segment will get excited, and we will see once again positive bias, positive move in the real estate pack. As far as the the entire universe is concerned, we of course continue to like Godrej and Oberoi Realty for long term. But Shobha also can be looked at amongst the south-based developers. I think Shobha is also interestingly poised, and at current level, it does look interesting.
Right. Let me quickly switch over because, we have been expecting HDFC Bank's numbers to come through, but that's not yet happened. We're very close to close. We're probably 10 minutes away. And let me quickly try and address what the expectations are from HDFC Bank with regard to its Q3 numbers. We have Vishy standing by to tell us more about what we can expect from the numbers. Vishy, over to you.
HDFC Bank is set to announce its third quarter results on Tuesday, where the bank is expected to report a marginal dip or a flat net profit on a quarter-on-quarter basis. What analysts are pointing out is that there's likely to be a slightly higher provisioning requirement during the third quarter, primarily because the Reserve Bank of India has raised the risk weights on certain unsecured loans, which makes it slightly more expensive for the banks to lend out this kind of money. Apart from that, the net interest income for the bank bank is expected to rise by about 8% odd. That is what the analysts are estimating at this stage. What we do understand is that deposit growth is likely to be slightly slower than what was previously anticipated, while the loan growth is likely to remain stable. Now, of course, when the bank released its provisional figures, what the bank had pointed out was that total advances would rise about 5% on a quarter-on-quarter basis to a little over 24.6 lakh crore, close to 24.7 lakh crore, while on the total deposit front, you would see deposits rise about 1.9% quarter-on-quarter, a little less than the 2% mark, well, with deposits lower than advances at 22.14 lakh crore. Now, all of this points to a situation because a bunch of loans were transferred into the HDFC Bank portfolio because of the merger with HDFC Limited. However, on the deposit front, the bank is still catching up, and therefore the credit deposit ratio for the bank is on the higher side, above the 100% mark. However, the bank is expected to increase its branch network over the coming year and thereby improve the deposit numbers in the coming quarters. What we also understand is that the NIM position for the bank is likely to have bottomed out in the second quarter, and from the third quarter onwards, we're likely to see the net interest margin improve quarter on quarter at least, with the CASA ratio also improving for HDFC Bank.
Right. Interesting in terms of what the expectations seem to be like. Margins is going to be one key number, but let me quickly take it to Sudip. Sudip, what are the key metrics that you'll be tracking when HDFC comes out with its numbers? What are the 2-3 maybe absolutely key non-negotiables, if I can call it, that you'll be looking out for?
I think that's only one, I would say, particularly metrics. That is the NIM. I think we all know, and I think that was what the industry and the whole market knows, that HDFC Bank needs to raise a lot of deposits, and they have been working on that. I think the HDFC Limited merger has put that responsibility on them. And in this process, the expectation is that the cost probably will go up. And if the cost of money goes up in HDFC's hand, bank's hand, then the net interest margin will get squeezed. Now, market will not like that, and one needs to understand what kind of pressure on margin is coming, if at all it is coming. And if there is no pressure on margin and margins keeps improving, in spite of the new deposit mobilization, market will give it a thumbs up. Now, remember, this is also critical. Deposit mobilization is also critical from the point of view of the fact that there is a good credit growth happening in the economy, and expectation is that credit growth will continue. Now, if there is, the credit book has to increase for HDFC Bank, they need to mobilize deposits as well proportionately. If they cannot do that matching deposit raising through CASA, their margins will eventually come under pressure, and the loan book growth will get slowed down. So I think the entire deposit mobilization piece and its impact on NIM is what we will watch out for.
Just, Hemen, if you have a quick view on HDFC and your BTST calls, before we wrap up, at the risk of repeating myself, a pretty wobbly day.
I am positive on HDFC. I won't like to second guess the numbers, but I still stick my neck out and say BTST on HDFC Bank.
Yeah, just HDFC?
Yeah, because frankly speaking, we're down for 11 trading sessions, oversold, crossover buys, positive divergence. It's ticking all boxes. Yeah, once again, results are a different kettle of fish, but I still say HDFC.
All right, that's a big one. BTST on HDFC just moments before. To be honest, we've been seeing moments before for the last hour. We're not sure when those numbers will come, but it's fairly clear that you're going to see the stock impact only tomorrow in trade. The question really for closing and just the last few minutes of closing is whether we're going to manage to close above the 22,000 mark on the Nifty, or are we going to see some last minutes of pressure coming in? Hemen, if we do manage to stay above 22,000, what would be the next levels of support that you're seeing and resistance?
Okay, we are frankly speaking slightly out of resistance levels, Tamanna, just maybe 22,120. Okay, if I were to sort of fine tune it further on the hourly charts, resistance comes in at 22,080, 22,120. Support comes in at 21,963 and 21,901. So these are untested because it is recently formed, Tamanna.
So 21,901 on the upside, but you are seeing a bout of weakness over there. Would you do anything at all, Hemen, right now with the Nifty IT? Looking at the kind of, I wouldn't call it a free fall, but a one-sided direction that we've seen since start of trade today?
I would still look to buy, Tamanna. 26,000 to 38,000 in 8 months. I mean, that's awesome. If we break up this current move and the current segment, Tamanna, we moved from 34,236 to 37,929 in three weeks. So frankly speaking, it's been hunky-dory all the way. There was a gap which has been where it has made an attempt to cover up, has just about missed covering up. So outlook is bullish. I am positive on the Nasdaq also, and our Nifty IT index also.
Top idea on the IT space, Hemen, at this point?
Okay, I think Mastech is something which looks good. OFSS, Oracle Finance, looks great on a cool-off.
Okay. Mastech and Oracle Finance is what Hemen likes. Well, just a couple of minutes to go. I want to thank Hemen and Sudip both for joining us on the show today. Hersh, we're looking like we're down for not a very great close, but all things considered, it's not been any kind of a bloodbath either. Maybe just a small hiccup in the kind of markets that we're seeing.
Absolutely, Tamanna, especially the rally that we've seen over the last 3 odd days, which is Thursday, Friday, as well as Monday. This cool-off is not something that anyone would complain for. We're down around 1/3% thereabouts, but you're still holding up above that 22,000 mark, just about 65 odd points lower. Even the Bank Nifty absolutely flat, flat as you like, slight negative bias, but holding up above that 48,100 mark as well. So couple of positives coming through. Let's quickly have a look at the advanced decline and pull up that chart, because clearly it's currently in favor of the declines and sharply in favor of the declines. You're seeing almost a 3:1 in favor of the declines, and that reversal playing out somewhere midday, after which it's been a bit of a correction. Let's go to broader market shift focus, because they're largely in line where we see it to the benchmark as well, around 0.4% lower for the mid cap. The small cap index also somewhere around 0.5% lower. So it's a rather similar kind of a day that we are seeing across the board when it comes to benchmarks as well as broader markets. I'm going to quickly take it to some names in focus. You have the likes of a BPCL, which is the top gainer on the Nifty today. But the markets have closed as we speak. So that's one piece. But you're seeing a sustained 33 odd stocks in the decline today. You have the likes of an HDFC Bank, which will be in focus on the back of earnings, which has closed higher by around 1/3% thereabouts. You also have the heavyweights, the likes of a Reliance, which will be in focus later in the week on the back of earnings. You have an LTI Mindtree, whose earnings are in focus. It's going to be an earnings heavy week when it comes to this particular screen. Tamanna, even in terms of sectoral indices, if you can quickly have that, you have a mixed bag when it comes to the sectoral indices. And that's been the case through the day, Tamanna. Nifty Metal was the top loser yesterday, the top gainer in trade today.
Yep. Remember, focus will be on Asian Paints and a whole host of other companies which are coming out with their numbers tomorrow. LTTM also in focus. I just quickly want to take you through what has ended the day with big gains. And second session in a row, IRFC closes up with a 9% raise. SAIL doing very well today. Remember, SAIL was your top call from our technical analyst as soon as we started the show today. Paytm on the back of that UBS note up about 4.5%. Z Entertainment was closed with a very good gain for the day ahead of a decision on their merger news. Polycab, Yes Bank, all of them have done very well. I'll just quickly take you through the top mid-cap losers. Vodafone, Prestige, Oracle, Fin, all have done badly, as have Oberoi Realty and Oro Pharma as well. But another big day tomorrow, and we'll wait and see what happens with HDFC Bank. Remember, the results, their analysis, all of that right here on NDTV Profit. We'll take a quick break, but thank you for joining us on this show. Stay tuned for more.